Hey guys, Mitchell here. Picture this, you just sat down with your morning coffee, ready to start the day, and suddenly you're hit with the flood of reimbursement requests. Angela from accounting is chasing down expense reports, Sally from sales needs approval for a client dinner, and your top performer is waiting to be reimbursed for that industry conference. And now you're wondering, which of these am I legally required to pay back, and which could turn into a tax nightmare? If that sounds familiar, you're not alone. Expense reimbursements can feel like just another administrative burden, but handling them the right way is crucial for your bottom line and for your employees' financial well-being. So let's break it down. What are employee expense reimbursements? Well, at its core, an expense reimbursement happens when an employee spends their own money on a business-related cost and you pay them back. Some of the most common reimbursement examples include traveling, such as flights, hotels, meals, mileage for business driving, professional development, office supplies for remote workers, client entertainment. Seems simple enough, right? But where it gets tricky is understanding where you're legally required to reimburse and how to keep those reimbursements tax-free. Are you legally required to reimburse employee expenses? The short answer, it depends. Under the Fair Labor Standards Act, you must reimburse work-related expenses if those costs would bring an employee's earnings below minimum wage. For example, if your hourly employee is required to buy their own tools or uniforms, you likely have to reimburse them. Otherwise, their paycheck might not meet the wage requirements. Beyond that, some states have stricter laws. California, Illinois, and Massachusetts, for example, have specific reimbursement requirements. Other states follow only the federal standard. So before you make assumptions, check your state laws. Are expense reimbursements taxable? Here's where things can get complicated. How you structure your reimbursement plan determines whether that money is taxed. The IRS recognizes two types of reimbursement plans: accountable plans, the tax-friendly option, and non-accountable plans, the tax headache. An accountable plan must meet three IRS requirements. 1. Business connection. Expenses must be directly related to the job. 2. Adequate substantiation. Employees must submit receipts or records within 60 days. 3. Refund of excess payments. If an employee gets reimbursed more than they actually spent, they must return the excess within 120 days. If you follow these rules, reimbursements aren't taxable. But if you don't, the IRS treats reimbursements as taxable wages, which means you and your employees will owe income and payroll taxes on them. That's why most businesses stick to accountable plans. They save money and reduce tax risk. How to make reimbursements easy. Now that you know the rules, let's talk solutions. How can you set up a smooth reimbursement process without all the headache? 1. Create a clear expense policy document. Which expenses are eligible, what proof is required, and how employees should submit requests. And make sure everyone knows the deadlines. 2. Use per diem rates for travel. Instead of collecting a mountain of meal receipts, IRS per diem rates let you reimburse standardized amounts based on location. 3. Leverage technology. Apps like Ramp, Dext, and MileIQ automate tracking, receipts, and approvals, so you're not buried in a mountain of paperwork. 4. Issue company cards for frequent spenders. If certain employees regularly rack up business expenses, consider a company credit card to avoid out-of-pocket spending. Just make sure controls are in place to prevent misuse. Common mistakes to avoid. Even with a solid system, there are a few common pitfalls to watch out for. Inconsistent enforcement. Make sure every employee follows the same rules. Delayed reimbursements. Your employees shouldn't have to wait weeks to get repaid. Poor documentation. Missing receipts or vague expense descriptions can create compliance issues if you're ever audited. Ignoring state laws. Some states have strict reimbursement timelines. Don't get caught off guard. Expense reimbursements don't have to be a nightmare. Start by following IRS guidelines, implementing a clear policy, and leveraging technology to streamline the process. It protects your business and keeps your employees happy. And if managing all of this still feels overwhelming, outsourcing your payroll could be the right move. Check out our video on Should I Outsource My Payroll to see if it's the best fit for your business. If you found this helpful, hit like and subscribe for more payroll and business tips. And let me know in the comments, what's your biggest payroll headache? See you next time.